Hello, I'm Jane Mayfield, a lawyer in the corporate department at LexisNexis. I'd like to welcome Alexander Keepin, a corporate partner from Berwin Leighton Paisner, who is here with me to discuss trends on delisting from AIM during the last year or so and what 2014 holds for the AIM market. Hi Alexander.
Hi Jane.
Hi. Alexander, we've done some research and it's carried out by our market tracker team, and it indicates that over a third of delistings over the last year or so have been from AIM companies, AIM investment companies, of which over 80% stated cost of maintaining a listing and 75% stated a lack of liquidity as being a reason for listing. Is this surprising?
I don't think it's at all surprising when you consider why an investment company would list on AIM in the first place. Like many other companies, it's seeking two main benefits. Yeah. It's looking to get access to capital, and it's also looking to be able to use its shares as a currency for making acquisitions. Okay. So when you look at what's been happening across the global equity markets in the last couple of years, getting that access to capital has been very difficult. And for investment companies, it's exactly the same. So this may mean that they can't actually raise the capital that they want to be able to fund an acquisition for cash, or they may think that there's going to be difficulties raising the finance once they've made the acquisition. Right. When you then look at the using the shares as a commodity, you have to look at what the current share price is. Yeah. Now, investment companies are at a couple of disadvantages compared to other companies. The first is that they haven't got a trading business. Okay. So it's difficult for them to generate interest in their stock and maintain the share price. The other thing is that they're often quite closely held, meaning that there's not a lot of investors there. So there's not a lot of shares available to the market, which means then movements in prices get exaggerated. Okay. And so those two things mean that for investing companies, they may not be able to meet their initial objectives from getting their listing. Now, what that also means is that if you're not getting the benefits, when you see the costs and the fact that your pool of money that you initially raised is dwindling, it means that it's then less attractive to stay listed.
Okay. Of those investment companies that delisted from AIM, 75% of them were incorporated in a foreign jurisdiction. And again, 80% of those stated that maintaining a listing, the cost of maintaining a listing, was a reason for delisting. Why would this be the case?
With overseas companies, when you're listing in London, you have to have a certain commitment to the market here. And that commitment can be demonstrated in a number of ways. The most important thing is that management will need to spend a certain amount of time here. Yeah. They need to be visible within the investment community. They need to promote their story. So you'll find that there's a lot of costs involved with management coming over, as well as management time. Yeah. And so it's not surprising then that when they're not getting the benefits, they start to question why they're incurring that sort of time and expense. Okay.
You mentioned management time there. We also noticed that a large proportion of companies operating within the banking and finance sector delisted and stated that management time was one of their reasons for delisting. Is that surprising? Do you think, why would that be the case?
I found that one of the more interesting things to come out of the research, because in the banking and investment community, it's a highly regulated sector. Yeah. So the time that management have to spend on a day-to-day basis in regulatory compliance is already quite high. Yeah, so for them to then say that and the costs involved are in maintaining their listing is one of the main reasons for delisting is surprising. It's almost as if they sort of misjudged the commitment that would be needed when they were originally listing the companies. Okay.
Well, just finally, we've been looking over the last year or so on the delistings. Our numbers, we also looked at IPOs, and our numbers suggested that the number of IPOs on AIM haven't matched the number of delistings that have occurred. However, the market seems to be picking up in this last quarter. And what do you think 2014 holds for the AIM market?
I think 2014 is going to be quite an interesting time. Over the course of this year, you've seen a number of high-profile listings, tending to be companies that have sort of business in the UK that are generating revenue. And we're seeing in the activity in the AIM market in Q4 with IPOs and fundraisings that those sorts of companies are doing quite well. So you're seeing listings across real estate, hotels and leisure, media and IT, and that's very positive. Now, what will be interesting is whether that then translates to the rest of the market. There are a number of companies on the AIM market that have got emerging markets-based businesses, or they're in natural resources, And for those companies, we're already starting to see increased activity, which you would expect in a build-up to 2014. What will be very interesting is to see how those companies do when 2014 transpires.
It sounds like the problems experienced by AIM companies over the last year or so reflected global equity markets generally, but that there's cause for optimism going into 2014.
Yeah.
If you want to read more about this subject, please take a look at a copy of our Market Tracker Trend Report, Trends in Delistings from and IPOs on AIM. Thank you.